Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. In this wrap-up is for the first trading day of 2023, January 3rd, 2023, just after 7:07 p.m. Central Time. I wish one and all a Happy New Year. I played hooky on you all. Hey, this is free. My paid subscribers, I played no hooky. They got everything that they wanted and more. And that's how we work it. And that brings up, this is a year where if you like these videos, give us a click. Think of subscribing. That's what keeps them going. I think many of you, and we have thousands upon thousands that look at these, support us. It's a simple subscription to the morning subscriber videos where I really put out the trades. This, you're only seeing a few of what we cover, and you're not getting from me, I'm telling you buy here, I'm telling you sell there. Hey, I'm wrong. Hey, we're right. Do this, do that. That's what you will see. You will see the trade unfold, the logic of it, why it's coming out. I often match weekly charts with dailies. I do that in the videos. And each video in the morning, 15 to 20 minutes long, but there's a scroll bar on the bottom, like right through here. There'd be a scroll bar, and you get to the section you want of stocks, SPDRs, ETFs, all by sectors as well. So please give it a strong consideration. Okay, so this is the year where there's three events that right now dominate the press. First, and these are not in orders of importance. The Ukrainian war, eventually it's got to either come to a head, something's going to happen. Either Russia gets so frustrated it's biological, nuclear, or there's an off-ramp where Putin goes bye-bye, because Ukraine's not folding. They're throwing every drone they can manufacture, get Iran's help with, and they're not going to fold. The people there are just too strong. They're not going to fold. Can they be beaten? Russia's got to prove that. They haven't been able to. If anything, I would have thought the Russian army at the very beginning was just going to go right through them. Amazing how resilient and how strong the people are there. Unbelievable. No small effort on NATO or the United States' part to back them, but these are the Ukrainians doing the fighting, and the more updated military goods they get, the better off they're going to be. Now, that war is going to change soon. From a winter war where Russia's trying to use what they used against the Nazis in the 40s, the cold weather to freeze you out, to a war that goes into a spring with soggy ground where you can't move the tanks around very much, by the way, to an area where it dries out, and then either the war battles begin or somebody finds an off-ramp for all this. The one thing I predict, Ukraine will not give up any of the captured ground that they have lost. Period. It's that simple. There will not be an end to this that way. They'd have to be beaten, and so far Russia's not proven they can beat them. Next, China, Taiwan. China's learned a lesson. Doesn't mean they'll pay attention to it. The lesson is the sanctions in the price of invading Taiwan. What do you want to do with all the Western business you get? You have now seen how fast Europe can turn on Russia and find other sources to do things. Do you think that lesson's being lost on China? I, for one, do not. At the end of the day, China can turn all the way they want inward. They're not going to isolate. So the question is, what do they do with Taiwan? I don't have an answer on that one. I certainly don't see the U.S. or NATO throwing its military might and fighting a war at sea or on land over Taiwan. But I see the same thing we're doing for Ukraine, identical. All the monies that they can muster up, all the weapons they can muster up, all that type of whatever. All right. And again, it's Goliath, the mainland China, against this island, okay? At the end of the day, that's what it is. But think of the size of Russia versus Ukraine. Same type of thinking. Then the last thing you have to deal with is the recession fears for 2023. Will they be met? Nobody knows. The guess is it will be, and that the Fed and other central banks will all fight the markets to get what they want. What they have to beat to get that inflation down is employment. You have to beat it. You have to beat it in a major way. But I'll tell you, if you look over our northern border at Canada, they brought in 450,000 immigrants. Their inflation isn't running away on them, and they're solving their labor market. It's time for us to look at our border to the south and all these people that are illegally coming in and want to legally come in, find a way to make them citizens. Get them onto the payroll. Get money into the Treasury. Get all this going. Let the Fed do its job, but get rid of the labor costs by bringing in more labor. If you bring in more labor, you're going to drop the labor cost. I know it sounds crazy, but you will fill those other jobs. Okay, there's a lot of service jobs immigrants can fill. There's a lot of professional jobs immigrants can fill. They're not all laborers, okay? So please keep that in the back of your mind. And boy, if I was a politician, I'd be all over this like there's no tomorrow. And thank God I'm not a politician, right? In fact, I don't even donate to a politician. That gives you an idea what I think of them as a group. All right, let's go to the market. I was asked to cover Costco. I'm going to. Now, a lot of you write me different things that you want me to cover. Some of them I'm not going to cover, okay? Some people want me to cover things out of Europe that you can't trade in America. I'm not going to worry about currency parts that change and things of that nature. Not going to do it. I had one person write me on the footsie. Just not going to happen. My client base isn't that. Costco it is. Now, I like doing Costco after some earnings, not now. But the market is beating this market down. It's gone from 540, roughly a 20% loss since its recent peak. Guess what? Just before December 1st. You heard me. The month of December has killed this market. Any way you want to cut it, it's killed the market. The trend is still down. You had an outside day down today. So if you've taken my outside day course, one thing you look at when you make a new low in a market is you don't want to see the high of that day taken out in the next two trade sessions. I explained that in the course. I won't go through it here. That doesn't mean I'm suddenly a buyer. It would be maybe the market sold itself out. Where's the resistance? If that occurred, back at the 18-day average, 467.16. Where's the support for the market? The lower Bollinger Band. Go back on these charts. How often when you hit these Bollinger Bands are you in a zone that's a lot of support? I would have thought more support back here than the market offered. The combination after getting through a 200-day average of right here. And it did. For a week it fought a battle and it just collapsed after that. You don't just leave those numbers. And that's my point. The 442 number is not a number you'd hit and just leave. That doesn't mean you can't go to 342 down the road. But we're talking now, trades now. The bears are in control. That's the number I think they're looking for. And the reason they're looking for it is you have the embedded reading. What do you do when you have an embedded reading? Embedded means the slow stochastics, the numbers that make it up, are trading underneath 20 and have done it for several days in a row. For those of you that question all this, go to our website, iraepstein.com, under the word education, and you will see the enhanced Bollinger Band course. Learn it. It's one of the most important tools of my legacy. So important. So I think the pros have been properly selling this market short, still looking for this number. And for those of you out there looking for the bottom in the retailers, why? It'll give you plenty of warning when it's bottomed out. When we come to LIT, ever since I listed this, and I think I did it back up here in November, the battery market has been unbelievably bearish. And again, an embedded reading, sideways action, begging short sales, market coming down, outside day down. When you get outside days down and days like this, I always mark off what today's high is. If you take out today's high within a 2-day period, it could be that sign that the market's exhausted itself to the downside. Things to watch. But until it's taken out, the pros are going to sell within that day, looking for lower lows off the embedded part. In Apple, who got bearish early on this, if you don't think I did, shame on you. You're not listening to everything that I do here. And I certainly got bearish, and I said, how do you miss Christmas sales and tell me you still love Apple? They can't make up those sales. They can't get the phones. And I admit, I said to you, they have such a loyal base. Ira included in that base, but thank God I got my iPhone 14 when it first came out, that people will wait. They don't want to get off the platform. I get it. I understand it. So there'll be a bottom. I don't know what the right number is, but what's going on in these markets as a whole? The Costcos, the Apples, the other markets that we're covering. What is going on? Do you remember what we talked about? PE ratios are collapsing. And that is the goal. The market will find its bottom off of more regular PEs, including Tesla fans, where it keeps getting beaten to death. Now, why did Disney come up in all this? There's a couple of reasons here. Number one, we had an embedded reading on Friday. See the numbers here? Not over 20. Today, you lost that embedded reading, period. So the goal is the 18-day average. What's the other reason that it happened? From a fundamental point of view, having owned a movie theater, I told you, while Avatar didn't come out with the blockbuster number on the opening, the question was, did it have legs? Did people talk about it? And did it keep hitting the box office number one week after week? Because there's nothing against it. That's good. That's what's going on. And that's what helped AMC come off from the $3.90 into the $4. I didn't say AMC's rescued. I'm saying that's it. But Disney's going to get its investment back. I predict that. And that is a good sign for Disney, because this was the biggest amount of money spent on a film. In XLF, the trend is up. So until you get back under here, the 32.92 area, I think the trade is saying, hey, I like the long side. Can we get up to 34.32? In XLI, the industrial sector, well, this sector is actually holding together. It's not bullish or bearish. It's got downside bias, but it refuses to go anywhere since it hit the Bollinger Bands back here, and it's just drifting sideways. Now, to get bearish on the market, I don't see a pattern that can happen. Even if it went through this number here, and I'll come back to it. This was Friday's low. Let's get to it. Even if it got through 97.29, because today's high took out Thursday's high, you'd have a higher high, lower low. As for getting bullish, there's not the pattern there. It's sort of in no man's land. In the semiconductors, well, there's a lot of overhead resistance, and that is going to be their problem. Do I think the pros are selling into the market? Absolutely. As long as you keep the embedded reading, this is the dream trade to go short, and you're out of it the moment you get a reading over 21. So these are key resistance areas with a target of 158.85. In the home builders, we have seen a market that lays down, not embedded. If we come back to Friday, both numbers under 20, both under 20 on Thursday, day before. So you're embedded. Now watch. You come into the beginning of the year, you jumped right away, and I was telling my traders this morning, no, I don't think you want to play that game. You're up to a number here where you're probably going to lose the embedded reading, and that's what happened. Can it re-embed? Of course. Tomorrow, if you have a big down day, it happens. But barring that, the market acts like it sold itself out against this, and it's waiting for the next event. What that'll be, we have to find out. Certainly, rate sub 6% would be friendly, the home market. I find myself hard saying that. Sub 6 when we're used to 3.5%. When you look at the energy sector, lower highs, lower lows. What's the fear here? Starts with an R, recession. Not only in the U.S., but worldwide. What will that do for the demand of the market? So today, not Friday, today, the market entered the bear trend. Lower highs, lower lows. Now, the first support's the 100-day average, which has been supporting the market on recent breaks. The secondary support, 82.71. I don't see anything friendly on the market at this point. I think the pros will be willing sellers at 85.47 with stops over 87.64. In GLD, do you get long over Bollinger Bands? Sucker game if you do. Market up there. Who's been bullish? Who told my futures traders today time to come out if they were listening? And the same thing would be there. SLV got up right to the Bollinger Band top. What do I teach you in the enhanced Bollinger Band course? First challenge of a Bollinger Band, not embedded. You know the rules. Copper. Okay, copper is going to be one of these super interesting markets this time. What's going on is sideways action now. So you've got a market that has narrowed in dramatically, the Bollinger Bands. Look at how wide they were in November, how narrow they are, and they're just spinning against the 18-day average. Be patient. Let the market give you a setup that makes sense. It's not there. TLT, a short covering rally, definitely underway, but with the embedded reading, which works out. It works out that the pros will pay, in my opinion, much more attention to this until the red line's over 21. They're going to sell this rally, looking to see if the market wants to drop back. UUP, dollar, right up to the 18-day average, negates the downtrend. Also was oversold, which means the FXE probably flipped the other way, and it is. Look for big support at 96.90. Should it get down there, it's void of a trend as well. So you put this all together, you come up with trade ideas, and that's the beauty. And this is going to be an interesting month. This week is super interesting. What do we have? Jobless claims and jobs report. You think those aren't going to set the tone for the February 1st FOMC meeting? It has to. There's no other jobs data prior to that. So this is the week that sets that. And then after this, we get all the PMI numbers and PCE numbers for inflation. January is super important. Keep up with it. How do you do it? In my twice daily updates. That's it. This is nice. It's general. Specific is where all the meat is. And it comes in at 5:30 in the morning first, live. I record it. And in that meeting, what I do is my subscribers get to see everything that I'm doing as I talk to it. Now, I have thought about making that, as I record them live to myself, open to subscribers. I'm going to be talking with my IT department. I would not answer your questions or anything, but you wouldn't have to wait for the recording to come out. You'd see it unfold as I'm doing it, and then I could, you've been in it. The posting would still be in the normal times, but that would be something of interest to some people. And I would do it for the ETF as well. So I'm giving it serious thought. I think these things out over holiday weekends and going, hey, that might be an interesting way for people to see it as it's right unfolding, and they don't have to wait for the recording to finish, for the posting, another way to do it. Just thinking it through, have to talk to my staff. But to get this, to get more ideas, just go to our website under the word research. It's all there. If you haven't taken the enhanced Bollinger Band course or the outside day course, they're under education at iraepstein.com. Good seeing you, and I'll see you first thing in the morning. Take care.